Hey, it's Mack with PriceActionTradingSystem.com, and it is Thursday. It's April 23rd. This will be our chart lesson for today. Um, it really was uphill all day from early in the overnight session. It was a little unclear till right in here when it started higher again. It looked like it possibly was going to be a range day, and noticed that I still had one short in there until it was pretty clear here we were going much higher. The first thing I would have done is measured this first leg up. And then once we got going higher from there, I'd look for something similar. You can see that's pretty much where we topped. They made one more push up before it sold off, and that's not common. And you can see it's just well, my clock says 3:15. Well, the market just closed there. And you can see that trend line still coming into play later. Now, earlier, I did have this line a little bit lower across this high, but once we went through there, um, I moved it all the way to the high, and later this fit in there pretty good. So um, the one that really mattered was this trend line, though. And if you had this midline, you might have been more tempted to enter on this first entry here, but I still think you're better off to wait and see what happens. And you get a little trap here and and that gives it the final push on up to that upper trend line. And it held to the tick right off of the highs of the overnight. And then we went lower from there. And that's generally what you expect prices to go from the low side to the high side to the low side, and if it continues back to the high side. And that's what we expect. And sometimes you'll get a few bounces down off the midline, and sometimes you'll get them up off the midline. And the midline's not as reliable as the trend line, but when you get a good setup there, you can't avoid it. If you get a good setup and everything else looks okay, take it. And you can see we had this little channel right here working down. Just to give you an example, we got the break, moved to a new low, and where does it bounce? Right off the midline and goes higher. And that is a second entry long. Notice this, there's your new high, pullback first entry, pullback second entry. So it is a second entry long as well. So, let's back out a little bit, talk about the trades, and then I'm going to wrap it up for today. And the weather's been horrible here lately, so if it's raining tomorrow, maybe I'll do a Friday chart lesson, but if there's not one, you'll know why I took the day. I took the afternoon off, so doesn't mean I won't trade tomorrow. And like I said, if I'm here and the weather's bad and I don't get out and I stay at the office and do some work or whatever, then I'll probably do a chart lesson. So we'll see. We'll just have to see how it goes. But once again, your measured move is from there, and that's where your uptrend started again. That's your two-legged correction in the middle. And notice how it gives you something up here much closer to this line. And that was another thing when we shot on through when I originally had it off these highs right here. If you notice, it fits right off those highs as well. And that's kind of where I had it early. And this midline looked like it was pretty good through there. So you couldn't deny that earlier, and it did help you with your trading. But in the end, I believe this to be the midline up here where I had the trend line, and your trend line is just up here like so. But let's talk about the trades. So when I came in, we were kind of in this little trading range. We had this trend down. We had a close outside a new low, and then we were kind of working higher here. Notice that you had a little two-legged pullback right here, but I didn't like that entry. It's not a very good signal bar or anything. It is a second entry. Notice the new high. You're pulling back. I mean, I get so many questions. People make this second entry so hard, and all it is this. All a second entry is a second attempt to move back with a trend. Notice the new high. We start correcting. You pull back. There's your first attempt to go higher. You correct again, and there's your second attempt. So that's a second entry. And then it looks like it's going to fail, and it pulls back, and it bounces right off that trend line again. This time, that's your confirmation of that trend line, and notice how there were several bars it held. I probably would have used the limit order here. I would have let it break higher and maybe dropped it right there at the top, or maybe a tick back, just to make sure I could get out before those highs in case it does it just like this, but keeps going the other way. But instead, it bounces again. And so, now I liked going long again off that line. Went lower first and then went out the top side, so just go long there. I really thought this line would probably be up in here somewhere, but it just kept bouncing along there, so you move it down. And is that a midline? You don't know at the time, but you know, when prices get up near it, that's probably a good place to exit. So, um, and the fact that this was like the one, two, third time, and now you got to go long right into that resistance, and after the fourth time, so I just didn't like taking any more longs up through here. It was struggling too much. And then you get the break and you get another second entry. Notice that there's a new high there. So the count's 0. It pulls back first entry. It doesn't make another new high, so it corrects again. So the next time it breaks higher, that's your second entry or your second attempt to go higher. It's really that simple. It's just how many attempts without making a new high. So it made a new high here, so the count's over. It corrects. That's the first time to go up, so it's a first entry. And you never get a second entry there. So notice that new high. That's your first attempt to go higher. It never makes a new high, and then it pulls back. So there's your second. And this was also a little trading range looking thing, and it broke lower in reverse. Look at that reversal bar. And you figure prices are going to test these highs. So I like entering there, and you get a pretty nice move out of that one. You got to kind of fight through that resistance, but it moves on higher. So I like that setup. It runs up and it starts correcting. And really at this point, I was leaning, even though, you know, you might have been looking for something to happen here. You really couldn't get this until you saw this move right here. Because you didn't have anything else down here to work off of. All you had was this original one. So, you know, it was looking real rangy. Notice how prices are back and forth, both sides of the EMA. So when it pulls back here, look how it runs right through the EMA. That's what a reversal pattern looks like. It pulls back, goes a little higher, and then it turns down and closes on. That's a nice bearish reversal type bar. Just go short. One tick below that. That's a quick, easy move. And then it bounces. So then you draw this line because now it looks like, hey, maybe this is a spike in channel. And I still think that's kind of what this was, a spike in a two-tiered channel that worked higher. At the time, I wasn't 100% sure, but that's what it turned out to be. And I was looking at the possibility of another pattern, but it didn't play out. This one played out. So this is the one I went with. It was really tempting to go long there. You got two legs down. And notice your new high again, and you're working down, and that's the first bar that broke higher in the previous one. So that's your first entry. So then you get another leg down, and it continues correcting. So the next time it breaks higher, that's your second entry. So this is a second entry long, but I just think it's risky. There are a lot of bars stacked up there. It's not a whole lot of room back to the EMA. An aggressive trader might take that, but I'm not going to mark it because I really thought we would work lower here. I was looking for another trend line further down here possibly at the time. I was also really thinking possible range day, and I just felt like without a better setup than that, but it would have worked. And you can see this working up, and then we start correcting here. You don't want to fool with this. Just kind of sit tight. This is kind of, notice all those matching lows. Let me just put the line on there. I probably should have it on there. After you get used to look at this stuff all the time, you don't always need these lines, but until you can see them with the bare eye, put them on there because they really change the look of things. I don't know why that happens. Sometimes you just can't get that line straight, and you come back and you draw it again and let go. It still won't go straight there. It doesn't look like. But anyway, you see what I'm looking at there. There's a little trading range right there. And you get a failed break lower, you go long, and then it pulls back. There's your new high. That high is higher than the last high. Really, that's the last high, so it's higher than that. So that's a new high. It comes back. There's your first break higher. Then it corrects some more, and there's your second break higher. So that's a second entry long, counting off that low. I would have used a limit order here to get back a little further to make sure you had room. But guess what? It pulls right on through there, pulls back. This is what you call a breakout pullback long. And what I like about this one is that notice that new low, first entry, pull back second entry. So it's a failed second attempt to go lower, counting off this low, and that's a trap. And you can tell, look what happened. That's what really set the catalyst off to go higher here. And most people are thinking short here. They're trying to get short. They probably don't see this trend line. They didn't draw the trend line off those swings right there. And they weren't paying attention. They don't see it, or they don't know to look for it. They don't know how to find it. But well, for whatever reason, um, they're trying to get short. And next thing you know, that was the move of the day. And if you got in right here, it was a pretty good move, but they did come back and get your stops right here. And that's how efficient this market is. Notice how every time they'll come back and get those break-even stops until finally you catch one. And if you can catch one and catch that runner right there, that'll make you several points from maybe 2102 area all the way to 2108. If you got out, well, if you got out after the first break, it's right there. Um, but it's still 5 or 6 points no matter where you got out. This was your first real correction here. It comes back, and it was tempting to go long there, but too many of these first entries fail. And notice how it's really struggling until you get that little next attempt to go lower, and then it turns up, and then look at it rocket off again. And all they did was people were trying to get short up here again. The weak traders all trying to pick tops, and they get burned every time. And that's all that does is help catalyst and move it quickly in the other direction. And so another nice setup there. And this was a form of a second entry too, because that's your first. This was your first move down off counting off that high, and so that's a failed second entry short that goes higher as well. So, and then now you make a double top, and where do you make it? Right, if you copied this line and drug it to the very top, you might have tried here first. It works pretty good right there anyway, but when it shot through, and you move it up to the next one, and you really could have already had it because you could have got your midline right across here, where you got that bounce and where you were getting all that resistance. So you really should have already known it was up there based on it being equal distance, and those should be equal distance or it's not a midline. So make sure you understand that. Double top, you're working down, but now you've got this shorter term channel, and we start getting resistance right there. I don't necessarily like that bar quite as much. This is a second entry, pull back first entry. Notice that's the first break higher, and then it's pulling back again. And there's the second, so second entry. Imagine that. And it goes higher. I say that tongue in cheek. I don't really mean that. I know people. It's common that it's hard to describe a second entry, and people they want to make it into some magical secret thing, and so they make it harder than it should be. But it's just your second attempt to move back with the trend. That's all it is. And on a bigger picture, look at this. That's one move back, a correction, and another move back. So on a bigger picture, that's a second entry long, but even on the small picture, your new high, pull back first entry, pull back second entry. And so it's a second entry both ways. So I really like that one. It's right off that midline as well. So I really like that one. But this was a second entry. Let me come back to this one. I would have definitely probably waited on this bar, and notice how this one closes a little bit lower, and probably gone long there. But it's so tempting because it's right off that trend line. It's a second entry. So if you went long on this first one, you have to let it break and then use a limit order. And that is a very little bitty, look, there's 3 ticks in that bar. And those are the kind of trades I like to enter because your stop goes, even if it goes 2 ticks, so that's 2, 3, 4, you're only risking 5 or 6 ticks. It's just a real cheap, easy way. And if you use a limit order, you probably get it down to 1 or 2 ticks. And so I like those little bars sometimes. And you'll hear me talk about that a lot because they give you a real low risk type entry. And if you catch this, one like this one, you get 4 or 5 points out of it with only risking 4 or 5 ticks, top, sometimes 2 or 3 ticks. The odds are in your favor if it's a good setup. If it's not a good setup, don't take it because it's a small bar by any means. But and that gets you into the 2 o'clock hour. There really wasn't anything else after that. But this trade, and this trade, it was obvious the market was trending higher by that point. And by then you should be able to have this two-tiered, these two-tiered channel here. By that time you should be able to find that. Early on, they're harder to find. I mean, people ask me, is there any secret? It's just experience. When you see it every day and you've been doing it for 10 or 12 years, it gets easier. So, I mean, that's why I'm always talking about experience and how important it is, and why, just because you've been doing this 6 months or even a year or two, it's like kindergarten still compared to what the best traders have as far as experience and screen time and knowledge. So, don't feel like, people, I mean, what really amazes me, and I was one of those people at one time, people that come in here and think in 2 or 3 weeks because they read a book, they're going to be able to day trade. It's not going to happen. I don't care who you are, I don't care how high, it's not going to. And if it does, it's a miracle, crazy something out of the blue happen. And I don't know anybody that's ever done it. I've heard people claim it, but I don't know. I've never known anybody personally that could prove to me they'd done that. And most people it takes them years, including me. So just understand that. See if there's anything else. I think that's about it. I don't see anything else in here that's really worth talking about. It's pretty much an uptrend from the get-go. It wasn't real clear it was going to be a strong day until probably wasn't clear it was going to be real strong until right in here. But once we started going higher here, you had to, first thing you look for is that measured move. And if we keep working towards that, then it's probably going to be a trend type day. And that's exactly what we had. And notice where it found resistance, corrected it, made that one last push, and it traps people, and then look how quick it sold off. And they love to do that. They love to get a reversal pattern. That's why I tell you a lot of times, wait on that second entry. It was tempting to go short here as well too, because there's a failed second entry long right there. But there's too much overlap and all right there. And it did work, and we were coming off the high, but I just think it's too risky because that's the first break of that channel. It could have just went a tick or two and then turned back up and then come down, and that's not uncommon. Not uncommon at all. So you got to be careful. This late in the day, getting towards 1 o'clock, you better wait on a good setup. Don't take any iffy setups, and that's iffy. It's tempting, but it's risky, and it's not what you really want to find as far as this late in the day. You want to take the right trades. So the key entry points, that kind of thing. And notice where all these trades are at. They're either they're traps or they're key entry points. And even then, they're still pretty much key entry points. Look, all off both of these are off these little short-term trend lines, and one of them's a trap. Same thing here. It's off the EMA, another place where you find key entry points. Same thing here, off the EMA, off the trend line, key entry point. Key entry point is as far as strong support. It's a trap. It's that failed break lower. Key entry point right off the trend line, or not the trend line, the support line. Second entry. Again, key entry point, the resistance now acting as support, so another strong support resistance area. This one was a trap. But it's, you could say this one's somewhat off the EMA, not really. This is probably the one loner that's a little bit different, but it's a trap. So, and now that prices are probably heading up to wherever the next trend line is, which is up here. And look at what this one is. It's a long off your main trend line up through there. Another key entry point. And then where's this one? Off of midline, which is another key entry point, but it's a second entry, and it's an uptrend. So that's where all your best entries are going to happen. And I say that over and over, but people don't. People still take odd trades in the middle of stuff here, and just weird weird places, but that's experience. And all you've done is you've maybe read a price action manual and you've watched a few videos and you're ready to conquer the world, and that's great. Nothing wrong with being positive, but make sure you're on the simulator and be prepared for crazy things to happen because it just takes a long time to learn this. So I try to tell people that, and I know how hard it is to believe it. Um, because I remember when I first started, I didn't, if somebody told me I couldn't do it, I didn't want to believe them either. I wanted to prove them wrong. But all I did was donate my money to somebody else that knew what they were doing, and I didn't. And it took until I knew what I was doing till I started reversing that trend. And so just take my word for it. Just you're not going to do this in a few weeks, probably not a few months, and maybe not in a few years. It may take longer than that. So, I know people's been doing this for 10, 15 years and they still lose money every single day, but they don't give up. But they've probably spent 10 or 15, 10 or 12 years doing the wrong thing. Believing everything they read in these forums and everything they read in books. It's just plain wrong. So, but anyway, that's enough. Last couple of days I get off on these tangents. Yesterday it was the gap, and we had some interesting um, um, conversations about that. But most of the time, those little what I call they really are gaps because the bars don't overlap. Any time the bar doesn't overlap, there's a gap there. It's just a one. It's I guess maybe I don't know if it's a gap or not, but I call it a gap. But look, it did that. This was a strong move up, but look how every time it backed up a tick or two and filled that little area. It even did it right there, and it backed up and filled it. And but I can show you where these trend lines run through here, where a lot of times it won't back up and fill it if that line's running right through there. And I don't know why. I don't really, like I said, it's not. I don't really care. I'm just interested in it because that's how you learn about the market. You study it, you follow it, and you try to figure this stuff out. And I guarantee there's a reason. It's not just a random thing. I guarantee you. If it was, they would all back up like these do and fill. And because the market doesn't like those empty spots. And even though those bars, it closes on its high and opens on its low, and there's no space in there, that's still considered an empty spot because most bars overlap. And you go and look, 99% of your bars are going to overlap, even if it's one tick like that right there. So when they don't overlap, there's something to it. And, that's my theory. And if somebody thinks it's just nothing to it, that's okay too. But, and again, it's not really even important at this point because I haven't proven that it's worth even thinking about. So, but it's something that I watch, and it's just one of the many things that I watch in the market and try to learn about it. And that's why I know a lot of the things. That's where most of this stuff comes from because I sat here for 15. Well, it's been about 12 years now. I've sat here for 12 years and watched it every day. So over time, you start to see this stuff. And, when you watch it every day and you see something happen, the same thing every day, you go, and you try to figure it out. And so that's how you get better. And I think there was a comment or two on the video about that too, about, when you're sim trading, when I say sim trade, try to come in here and take every trade and then study your work at the end of the day. I don't mean just enter blindly. Definitely try to follow the rules, but if you see a trade that sets up following our rules, take it. And then and don't monkey with it. Put your stop where it goes, put your exit order where you're planning to put it, and let it go. And see what happens. And then at the end of the day, that's when you worry about where was it right or was it wrong, and you study it. And if you were wrong, you try to figure out what went wrong with it. Why did that trade fail? And if it was right, you double check it. Did I just get lucky? Did I really read it right? And you'll know. I mean, at the end of the day, if you were reading it right. You should know. If you can't look at it at the end of the day and tell yet, then you still got a lot of work to do. And there's some people that say that they don't have a clue what they're looking at. I mean, The average person, if you take all this stuff off here, um, and you look at this, they have no idea. All they know is that prices are working up, they're working down, they're working halfway sideways up, then they're straight up, then they're sideways, they're upside. They don't have a clue. And they wouldn't have a clue how to find those lines. They wouldn't know what those midlines are, but it's because they don't know. They don't have the experience. And the only way to get that is to work on it every day. So just keep working on it. Don't give up, but don't go live until, people ask me, when should I go live? When you can take a sim account and you can follow the rules and not monkey and doubling down and adding on and all that, when you can take a sim account and you can double it, start with maybe $5,000 or $10,000, and when you can double it or triple it, trading properly, then you're probably ready to give it a shot live, and you probably will still struggle a little bit because you'll still have the mental aspect to conquer to some degree because you're going with real money. But you've at least proven you can do it if you do what you're supposed to do, and that's the first step. So anyway, that's enough for today. I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.